All right, what's up, everyone? I got the recording officially going. We're officially live. I do a stream every Wednesday at 4 p.m. Eastern. Normally, it's an earnings stream. There just wasn't much special on the earnings calendar for this week. So, and of course, the markets are closed tomorrow for President Jimmy Carter's funeral. And also the bond market's closed 2 hours ago, I believe. So the bond market's already closed. So just wanted to go over some things, talk about some of the stocks I'm going to be trading this quarter. Maybe let you talk about the strategies I'm going to use to trade them. So probably be like a 30-minute stream. Not going to take up too much of y'all's time, but figured I'd jump on here and since we didn't have anything special for earnings, maybe we could just talk about some stocks and maybe do some due diligence on them, look at some balance sheets, some income statements, and just kind of show you some of my favorite stocks and some of the stocks I've already been trading this year already. So on my screen right now, just got a chart of SPY and QQQ. Very, very sloppy day today. Very choppy day. We did have the minutes meeting at 2 p.m. Eastern, which was the FOMC December meeting. So the data of that meeting was released today, and I thought there'd be more of a market move, but just nothing. So SPY, S&P just been ping ponging in the range. And so yeah, the 2 p.m. Minutes meeting didn't really do anything. So kind of ended the day at the top of the range. So I guess that's something. Same thing with triple Qs, just kind of indecision and choppy. If you're a good day trader scalper, maybe that would have been good for you. I know y'all like the range days and just kind of short at the top of the range and go long at the bottom of the range. And those would have been easy trades today. But other than that, not really great for swings or anything like that. Kind of theta just burning everything as it's trading in this range. But with that said, yeah, the been watching the 10-year yield lately. That thing's been rallying pretty good. Also, the U.S. dollar's been going up, and we all know when we see the 10-year yield and the dollar go up, that a lot of times negatively affects the stock prices, right? So a lot of times money comes out of stocks and into the yields or the dollar, and vice versa. Sometimes when the 10-year yield's pulling back and the dollar's pulling back, money's flowing into stocks. So just kind of a little comparison to keep in mind there. But yeah, let's go ahead and jump right in. Let me first just give a little peek at this couple strategies that I use to trade some of these stocks. It gets a little more in depth than what I'm about to show you, but I'm just going to show you real quick kind of what it looks like. So everyone that knows me in Discord knows I run a lot of the wheel strategy. It's been my go-to strategy for several years now, and I've traded a lot of different types of strategies, and by far the wheel's been the most consistent and profitable over time. So that's my favorite strategy to trade. And we're basically selling cash secured puts to get into a stock, if you will. And sometimes we'll stay on the cash secured put side for 2-3 rounds, see how many rounds of cash secured puts we can get through before we actually get assigned stock. And while we're doing those cash secured puts, we're obviously collecting premium and getting paid to write the contracts. So it's decent income on the front end of the wheel that we collect. And eventually we get assigned stock and we always keep a little spreadsheet on the side, keep track of all the premium we collected on the cash secured put. So we have a really good idea of what our cost basis on the shares are going to be once we're assigned. And then once we're assigned shares, we obviously rotate the wheel and start selling covered calls for income. And that's always fun. And we just make sure that the strike price on the covered call is above our cost basis. And it usually ends up being a great trade and kind of a lot less stress than the rat race of day trading and stuff like that. We're not looking for home runs or grand slam hits here. We're just looking for consistent gains. It's a lot slower. So if you're looking for excitement, maybe do what I do, just have like a little smaller account that you can use and trade for fun, day trade for. I still day trade a lot, but it's usually for fun and with a very small percentage of my capital. Bulk of my capital in my bigger accounts is usually allocated to the wheel strategy, and been able to return 20% plus each year for the past quite a few years. And it's just consistent. It's slow and steady, and like I said, a lot less stressful. But yeah, once we're assigned shares and we start selling covered calls, we'll see how many rounds of covered calls we can rinse and repeat, if you will. And the whole time we're doing that, we're collecting income and premium. And sometimes we get away with 2-3 rounds of covered calls before our shares are called away. And once the wheel fully rotates and the shares do get called away, then we just kind of restart it. If we still like the underlying and we still feel good about it, then we just restart the wheel on it. If our opinion about the underlying has changed, then we could find another stock and do our due diligence and see if it check some of the charts and see if it's a trade would want to do. So that's the bulk of the trading I do, is the wheel strategy. If the stock pays a dividend, I will also do what's called a buy plus right strategy, where we're basically buying shares and simultaneously short the call option. So this is kind of bypassing the cash secured put side on the wheel and just kind of jumping straight to the covered calls. And we do that on stocks that pay dividend because especially if the ex-div date's coming up, we want to own the shares immediately, and we're not trying to mess around with getting tied up in cash secured puts if an upcoming dividend payment's coming. And it just depends if they pay monthly dividend or quarterly or biannually. Some stocks pay once a year, but of course, if they pay quarterly and we catch it at the beginning of the quarter, maybe we could get away with a few rounds of cash secured puts. And if we haven't been assigned by the time the next dividend comes up for pay, then we'll just put the cash secured puts on hold. We'll go ahead and purchase the shares, and then we'll sell some covered calls to kind of hedge the downside a little bit. And like I say, there's even more profit in there as long as you're keeping your covered call strike price above your cost basis. There's also additional profit there, which would be the difference of your cost basis to the covered call strike. So you make money there. And then, of course, the premium we're collecting when we're writing the covered calls, that's another source of income. And then, of course, the income on the cash secured put. So it's kind of like a triple income threat, sometimes we go after. And then, of course, dividend payments and stuff like that. But yeah, so with that said, let me just exit out of that. And let me just check the Discord. And I'm live on YouTube, Twitter, and Twitch right now. And we got a good amount of people in the Discord as well. Snowflake saying, "What's up? What's going on, brother?" Show Squirrel waving hi. Good to see you. So yeah, let's look at some stocks. Just gonna kind of go through my list. I'll go over one that we've already been trading, and those who I met in Delray Beach for the Traders Paradise. You'll know what I'm talking about. This was we've been trading Cloudflare lately. It's been a fantastic trade, and this stock's currently trading for $115. What we've been doing with this, I mean, it's a $115 stock. So for instance, if you sell $110 cash secured put, it's going to require a bit of capital, to sell that cash secured put. Of course, it would be the strike price 110 times 100 in the option world, right? So you'd actually need $11,000 to start wheeling that. So what we've done in the Discord, though, is we kind of figured out a way around this buying power required, and that's basically forming a diagonal calendar spread. So that also, just for the people on YouTube and Twitter who don't know me, that's mainly what I do in the Discord, is focus on advanced options trading. We target weekly and monthly income, and just about all my trades are multi-leg options, okay, and lots of spreads involved and stuff like that. But how we've been trading net is basically to reduce the buying power needed to sell a 110 cash secured put, because if you sold that by itself, again, you'd need $11,000. But the way we kind of worked around that is we would buy some longer dated collateral, basically. Okay. And so we go out about 3-4 months, and we'll actually purchase a put with a strike lower than the 110. And in essence, what we're doing there is forming a spread. So let's say we went out 3-4 months, and we purchased the $100 put. Okay. Then and so if we own $100 put that we bought for a debit, now we can go after weekly income on this. So if we have a longer dated collateral for 3-4 months out, now every single week, and you can see here net has the weekly options, every single Friday we're trading this, and we're using our longer dated $100 strike collateral or option as collateral to reduce our buying power. Because what's happening after we purchased a $100 put, if we're rinse and repeating the 110s every week, that just formed a 10 wide spread, which would be the 110 strike, the one we're selling weekly, and then minus the $100 strike for the longer dated collateral. That forms a 10 wide spread. And as long as that spread, as long as we have that longer dated collateral each week when we go to target our weekly income trades, we're only tying up $1,000 on this trade, because now the spread is 10 wide. And then of course, times 100 for options, we're only tying up $1,000 now instead of needing 11,000, right? So, real creative way that we use to reduce buying power by buying longer dated insurance, if you will. And it's just an effective way to be able to sell cash secured puts weekly on these bigger stocks, $100, $200 stocks, without needing all the capital that we would need just selling a cash secured put by itself. We got USMC on Twitter saying, "What's up? Good to see you. Glad you joined the party." Like I say, not going to be streaming for a long time tonight. Usually this is my earnings stream that I do every Wednesday. There just wasn't anything worth, streaming as far as earnings go this week. So I figured I'd come on here and just kind of talk about the way I trade in the Discord. And like I say, lots of multi-leg options, and it's good learning material. If maybe a little bit about options, but you're trying to figure out a different way to trade using options that's different than your typical day trading. I'm going to buy a call and I hope it goes up, or I'm going to buy a put and hope it goes down. That's the basics basically. But trading goes so much further than that. Okay. And especially if we're using multi-leg options to trade, so many different ways to manage the position. It's not just a one and done, like it is with a lot of the day trading. So I have a lot of fun doing it, but just wanted to show you kind of how we've been trading net, and it's been a lot of fun, and we've already created a bunch of income already. And I actually just took profit on my weekly trade on net. I took profit on that yesterday, and I didn't even have to hold it all week. I opened it up last Friday, January 3rd, and we took profit on it yesterday. Didn't even have to hold it till Friday. And then this Friday, I'm going to meet the Traders Paradise people in the Discord again. We have a stream every Friday specifically for these types of trades. And we open the trades on Friday, and Friday is also kind of our payday. A lot of times we get to take profit early, which is always a good thing. And it's a lot of fun to do. So let me just kind of talk about a couple other stocks that I've been watching, but keep net on your radar. I know it's kind of sitting up here at the top, but this is the company's name is Cloudflare. They're software and IT service company. Okay. And right now their float's about 300 million. But they're sitting on a ton of cash. Okay, they have almost 2 billion cash that they're sitting on, and I just really like the company. Assets have been slowly increasing, which is good. Debt to assets only 68%, so that's fine, and that's been slowly downtrending. And of course, we want the debt to asset percentage to be as low as possible. And they Not pulling a profit yet, but the year-over-year numbers are great, and they're getting a lot of great reviews from a lot of analysts, a lot of price target upgrades, and this one's been very fun to trade. So just keep your eye on it. Maybe wait for it to pull back to some of these EMAs, and then you can try and scoop it up for a bounce there. But that's been a fun one to trade. Another one I've been looking at is ARM Holdings. I don't know if anyone's familiar with that. Kind of liking what I'm seeing on the chart. There seems to be some decent demand on the chart in like the 120, 130 range. I know it dipped below there recently before back into the 90s, but that was back in August, first week of August. That was kind of a market-wide sell-off there, so no fault of ARM in particular. And I think it's been holding pretty good since then, even making some higher lows and stuff like that. And you see a lot of volumes kind of come in right underneath where it's trading at now. You can see from the volume profile here. And this is data dating back almost 1 year worth of data. They do have earnings coming up on February 5th, and EPS estimate 0.1538. Definitely be interested to see what their earnings are, but this is another one I'm probably going to do weekly income on. The premiums are nice and looking pretty good on the option chain. A little inflated right now. Of course, what VIX end the day today at? Let me see. I know VIX was up. Okay, it's sitting around 17, 18, so not too bad. But this is another one I'm going to rinse and repeat the weekly income. And again, I'm going to go out like 3-4 months, buy a longer dated put option to use as collateral, and in essence form weekly spreads on it. I'll just leave the collateral open the entire time, and we'll rinse and repeat the weekly short options. The second ticker I'm looking at is ARM Holdings, ARM. Keep your eye on it. I like the company. They do got positive EPS at 0.60. They are a profitable company, and so they are pulling a profit. They got positive net income. Debt to assets super low at 25%. Really like ARM. And they have a moat, and I just like the company. Okay, so put that on your watch list. This is one I'm definitely going to be trading this quarter. And I know I do advanced options, but if you trade differently, just think about my bias. If I'm bullish on something, you don't have to use my exact strategies to trade them. You can use your own trades. Just know that I'm kind of bullish on these stocks, and I like the companies. So the first one I was talking about, though, someone else had asked as well, was NET, ticker symbol NET, and that's the company's name is Cloudflare. Keep your eye on them. The second one is ARM. Really like ARM. And then I wanted to go over a couple more here. Another one I was been watching is ASML. Okay, I'm it's at a discount right now. There was some pretty good support. Now, keep in mind, this is a $700 stock, so a little bit pricey, but I like what the chart's doing. It did have a negative reaction on the last earnings. It did bottom out at 645, and it's back into the 700s now. So clear bottom in the mid sixes, and you can even see the volume profile node sticking out here at the $700 level, basically. So it seems like there's going to be some pretty good support around 700 on ASML, and look at all the upside room it has to retrace this. And this is the daily chart too, and you can see when it was downtrending, the price was below my EMAs. I use the Fibonacci sequence numbers for my EMAs, which would be the EMA 8, the EMA 21, the EMA 34, and the EMA 55. For you mathematical people out there, you know exactly what I'm talking about. But this was downtrending, clearly getting rejected off the EMAs, and when it came close, it did break through previously a few months ago, but it didn't even hold up there for one day, the very next day, and that was an earnings day too. It just kind of dumped from there. It's finally above the EMAs now, so the chart looks interesting. The MACD has flipped bullish. We did get the bullish crossover on the MACD just a few days ago. So the MACD is reading positive now, so it's above the 0 line. We got bullish crossover, and we got some green histogram candles on the MACD. So that's definitely a bullish signal for me. I'm just kind of waiting for this TTM squeeze to fire off. It looks like it wants to. The last time TTM fired off bullish, this thing went from 660 to 750 something, and had a nice move up last time that TTM fired off, and that was in conjunction with the MACD being green. So I don't use a ton of indicators, but I do like the TTM and the MACD, and of course I like RSI to show me strength, and I just trade off a lot of price action and volume. Okay, but I do think there's some good support on ASML around the 700s, low 700s. And of course, there's a little bit of a gap here. So we got a little bit of unresolved price action, which would take the price right down to where the demand is. I would be a little concerned if the low 700s, if it lost that level. You can clearly see on the volume profile, there's a big volume gap here. So I'd be a little concerned that if the low 700s did break structure, it might be a magnet right down to where this previous demand was in the 670s. So just keep that in mind. It's something to keep note. Recommended MACD time frame for a swing. I always start with the bigger time frame. So I'll look at the weekly in the daily. Definitely would like to see some bullish signals on the MAC. If I plan on swinging some, 4 hour at 4 hour chart at the minimum. It also depends how long are you swinging it. If we're just swinging it overnight, maybe stick to the 15-minute or the 1 hour, something like that. If it's just like a couple day swing. But if it's going to be like a week or a month, you should definitely be looking at the bigger time frames, because there's just going to be too much noise on the smaller time frames to really determine if you're riding a good trend or not. So if the swing is longer, like a month or a couple weeks, start with the bigger time frames, kind of reverse engineer it from that, and you'd like to see 4 hour daily, weekly, all kind of in trend there. If it's just holding overnight or a few days, 15-minute, 1 hour chart, you'd be all right. So I hope that clarifies that. Someone was asking a question on Discord there, just different time frames I look at. But anyways, ASML, I like the company. They got a solid PE ratio, positive at 39. They even pay a little dividend, 0.9%. I mean, something better than nothing, right? EPS nice and positive at 19.63. And for those that don't know, ASML is a semiconductor company. Of course, semiconductors have been hot in the past year or two. And I think semis were actually down today a little bit. Let me see the sector information. Yeah, tech actually ended the day flat, but the subsectors, communication equipment and software and IT did very well within the tech sector. But the semi component of tech, that's really what took a hit today. In case anyone noticed that particular portion of tech was down 0.35%. I think if semis weren't down today, the tech sector in general would have been nice and green. But you know how that goes. Heat map kind of looks a little ugly today. Got some pops of green in healthcare, specifically healthcare plans and medical devices were nice and green today. Drug manufacturers like Lilly, they were green. J&J was down, but just not really a clear picture of what's going on today. And it was interesting because we had healthcare ended the day at the top. Consumer discretionary was green, which is usually a risk off sector. Risk on would be money flowing into risk on would be money flowing into consumer discretionary. Risk off would be the staple companies, consumer staples. So we actually do have basic materials, industrials, oops, refreshing on me, so, healthcare. So these are kind of like safe haven sectors. So I guess, yeah, definitely kind of, it wasn't painting a good picture earlier, but it definitely seems like it was more of a risk off day. But all in all, from a bird's eye view, just very, very choppy and undecisive. So, of course, the markets are closed tomorrow. Thursday, I will probably get a market move on Thursday because we have. I'm sorry. Thursday, the market's closed for President Jimmy Carter's funeral. Pardon me. Friday morning is more labor market data. We may see some action Friday morning. We'll just have to kind of wait and see. Next week is inflation week. Okay, we got producer price index Tuesday morning, consumer price index Wednesday morning, and then initial jobless claims Thursday. So next week I think is going to be more of a market mover week. We got the beige book at 2 p.m. on Tuesday as well. I think we'll get more action next week than what we're seeing this week, and it's a short week. A lot of times it's trading on low volume on short weeks. So with that said, let's go back to the sticks real quick. Yeah, ASML. I like the stock. Debt to assets been downtrending. I like that. And they are very much a profitable company. They range between 1 billion and 2 billion positive net income every quarter. So I love the fact that they're profitable and just a powerhouse of a company when it comes to semi companies. And they're located in the Netherlands. So I know it's not US based, but it's a very solid, strong company. They have earnings on January 29th, EPS estimate 6.72. So that's another one I like. We go over a few more. It's almost 4:30. Wow. Duco on Discord. Yeah, no problem, man. Thanks for coming. I don't care if you're late or not. Dropping by to say what's up. Duco says, teach me how to grow my money with passive income in 2025, please. Yeah, absolutely. Well, you're a lifetime member, so you already know what I'm doing. But let's take a look at a couple more before I get out of here. So just to kind of recap, I really like NET, ticker symbol NET. That company's name is Cloudflare. I also like ARM. Okay, that's another one that I like. And again, another semi-company. Looks like semi-companies are the theme today. And then ASML is another one that I think you should keep watching. So that's 3 semiconductor companies. Let me see if I can find one that's not semiconductor company. Keep your eye on Visa. I really like trading Visa. We traded it quite a few times last quarter, and this thing's just a beast. And going back to like the first week of August of last year, where that market-wide sell-off happened, Visa didn't really get hurt too bad. It did lose the EMAs, but it got back above the EMAs really quickly. Went on the run from there. Had a little dip below it here, but the dip was scooped up and bought and ended up running. You can see the price is now coming back to test the EMA. So keep your eye on Visa. If you want a really good discount on it, maybe low 300s, and look for a bounce there. It has some gaps in the chart. The most recent one brings Visa to the 290s. So if you want to really wait on a good deal on Visa, and I think we'll get it. Wait for it to go into the 290s, and I think that would be a good time to go long on Visa. I really do. Number one, that we got this unresolved price action here with this gap. So just waiting for the price to kind of go down there and resolve that price, that gap. And I would love to go long on Visa again in the 290s. Before all this price action started, which was, let me just put a box around it right here. We were trading Visa last year before that. And we were trading it when it was up here, and it ended up gapping up. We still continued to trade it. I ended up using put credit spreads to trade this, and we had quite a few successful trades on it, and it was a lot of fun. We made some decent money. But if it was me, and again, not financial advice, if you want a really good deal on Visa, wait for this gap to get filled in the 290s, and I think that would be great a great time to maybe start scaling into a long position, maybe some longer dated options, or I know it's a $300 stock, so the options that are at the money are going to be a little pricey when you put some time on it. For instance, March 21st, you can see the options close to the money. I mean, these things are selling for like $900. The puts are going for 900. The calls are going for 1100. If you want to know a way to reduce the capital needed to trade these strikes that are close to the money, just open up a spread. And what I would do would if, of course, if we're bullish on Visa, I'll give you two examples of a spread that I would consider if I was bullish on Visa. And this is just kind of hypothetical because me personally, I do want to wait for Visa to fill that gap in the 290s. And then that's when I'm going to really start aggressively trading it. So I'll give you two examples of the two trades that I would do once I'm ready to start trading it. I'm not ready right now because I want that gap to fill. But as soon as that happens, there's going to be two trades I would do. One would be a put credit spread, and I'll show you how I would build that out. And then the other one would be a call debit spread. The risk reward on the call debit spread is probably going to be better than the put credit spread. But for a put credit spread, if I was confident, let's say it filled that gap in the 290s and I was confident, it was going to go up from there, you could get probably a little aggressive with it. And what you could do is you could sell a put credit spread. You could probably do like a 5 wide. So for example, this 300 put is selling for, I'll just take the bid prices, okay? So that's selling for $570. So I would actually sell to open that, okay? So that would actually be a credit for me, all right? Now, instead of spending $570 on a naked option, what I would do, a put credit spread is the one you're selling to open is always closer to the money. So we would sell the 300, sell to open the 300, and then buy to open the 295. So we'd get a 570 credit for selling to open the 300, and then to form the 5 wide spread, we would buy to open the 295, which would cost a debit of 450. So 570 minus 450. So basically we would get $120 credit on that trade, on the onset of the trade. And really the only thing we need to happen to get the max profit of 120 would be for Visa to be over $300. That's literally it. There's no other mystery behind the trade. We have 72 days, till expiration. So there's some good time on it. And again, instead of buying a call option, that costs over $1,000, with forming the 5 wide spread, we'd only be tying up $500 with the broker instead of paying $1,000 for these calls. So we'd tie up half as much capital, and then we'd also get a credit on the onset of the trade. And we just need Visa to stay above, to get back above 300, and then this would be an easy trade. Now the break even on this would be the credit received, which would be 1.20, and then we could actually minus that off our short strike. So 300 minus $1.20, which is $120. Our break even is actually only 298.80, which would mean as long as Visa's gets above 298.80 and stays above 298.80, that's going to be a good trade. We'll at least break even. Anything from 298.80 and higher, there will be some profit there. And of course, if it's over 300, then that's the $120 max gain on that credit spread. So I know the risk reward isn't too great on that, and that's kind of just how credit spreads roll. A lot of people that trade credit spreads, sometimes it's like risking $3 to make $1. It kind of is like what happens sometimes. But you have to understand the win rate's going to be much, much higher. I mean, if you trade credit spreads correctly, your win rate should be 80-90%. So yeah, it's okay to risk $3 to make $1 in a 4 wide spread example. because we have such a high win rate. If you want a better risk reward, then I would recommend doing a call debit spread. And that's actually going to make your max risk a lot less than a credit spread. And how I would set that trade up, and let's say I wanted to go long on Visa right now, and I'm looking for a much better risk reward compared to a credit spread. Then what I like to do is kind of I usually do one leg of the call debit spread in the money, and then one leg out of the money. I'll show you how the math works out there, and then I'll show you the math on if we're really expecting like a big move on Visa. Debit spreads are good to do for like earnings, lotto plays, because the risk is so minimal compared to the reward. And I'll show you kind of how it shakes out of the bag. So let's just go one strike out the money. All right, let's say I think Visa is going to be above 320. Okay, it's only less than $8 away from the price now. Let's say I think it's going to be above 320, and we've got plenty of time on the spread for that to happen. Then what I would do is I would actually buy to open the 315 strike, and I'll just take the bid prices. If you bought that by itself, you'd need $1,110, so a little over $1,000 just to buy that naked call. So the reason why we whip out a debit spread is to reduce that money needed to participate in these options that are close to the money, right? I mean, the options that are closer to the money, I mean, that's the correct way to trade options. Like if you want to be consistently, have some success, the closer they are to the money, better yet, in the money, the much better delta you're going to have. And we all know that's the value that the contract changes based on every $1 move of the underlying. So of course we want a high delta. Goes both ways though. It goes against you just as much. So, but a high delta is good nonetheless. And of course, options that are at the money or even in the money, you're not going to be impacted by theta as much. The theta is still there, but it's not going to be as bad. Okay. So there's some benefits of being in the money or at the money. It's because the Greeks are a lot better and more in your favor when the trade goes in your favor. So anyways, let's just finish this example here. So if I think Visa is going to be above 320 in the next few months, then I would buy the 315 call, buy to open. That costs $1,110. On the same trade ticket, very same trade ticket, I would sell to open the 320 call, and that gives us a credit of $865. So yes, the 315 call costs $1,110, but if I form a spread and sell the 320 to open, I'll collect the $865 credit. So $1,110 minus $865. Now, to participate in these options that are real close to the money, instead of needing $1,000, I only need $245 now to trade these options. So that's kind of the magic behind forming spreads. Is importantly, we get a great reduction in buying power, which allows us to participate in the strike prices that are closer to the money and without needing all the capital, if we were just doing these naked options per se. So now I'll only need $245 to trade this, to get the benefit of the Greeks on the options that are closer to the money or in the money. And now let's talk about what the max gain on this would be, because we are capping our upside a little bit, but hey, that's okay. You kind of, give and take here, sometimes. So yes, we don't need $1,000 to buy this, to participate in these options that are at the money. We don't need that much money anymore. Now we only need $245, but we kind of capped our upside a little bit because that's what a spread is, right? So if it's a 5-wide spread, we know the total value of that spread is worth $500. For each $1 width is $100. So if it's 5 wide, this is worth $500. So if I bought this call debit spread for $245 and Visa was above 320 by the expiration date, And of course, we don't have to always hold these to the expiration date. If Visa makes a nice rally, a nice up move, we'll see profit on these debit spreads a lot sooner than March. And we do take profit early on a lot of these, especially when we get a nice move. But just talking about what the max gain would be on this called debit spread, we know it's a 5 wide spread, so it's worth $500. Well, I paid $245 to open it. So we take the $500 that the spread is worth, minus out the $245 debit that we paid, which means our max profit that we can make on this spread is $255. Still a great return, because if you can bring in $255 and your max risk was $245, because that's what we paid as the debit, that's the most you can ever lose on the trade. That's still 104% return on capital. And just to clarify, the $245 we spent when we opened it, we get that back. Okay. Someone asked me that the other day. They're like, well, if you paid $245 and your max profit's $255, you're only making $10. They failed to understand that the whole spread's worth $500. So you get your $245 back you originally paid, plus the $255 on top of that, which makes it 104% return on capital. Okay, so I just want to clarify what the max gain and the max losses are on this particular debit spread. But yeah, so that's what I would do if I was bullish on Visa. And Jace Smash on Discord. Yeah, that's kind of what was confusing you at first. And no worries. And that's why I'm here, is to kind of explain the metrics of these trades, because we need to have a full understanding of the metrics of these trades to be able to trade them properly. And it's good to know, it's good to know. So yeah, that's what I would do if I was bullish on Visa. So just to kind of summarize on some of my favorite stocks, and it's a good, put them on a watch list and keep your eye on it. These stocks like to bounce on pullbacks and stuff like that. But basically looking at ARM, ticker symbol ARM, ASML, that's the next one. Then we got TSM, that's Taiwan Semiconductor. And then NET, and then of course I like Visa. All right, so I know there was a lot of semiconductor companies in there, but I did throw in one fintech company here, which is Visa, global payment processing company. Of course, everyone knows that. So yeah, that's what I got there. I did want to mention, if you are looking for a new home, because I know we got almost 400 people tuning in here on I think it's mostly Twitter. Welcome everyone. Probably a lot of people coming back, because I've been streaming on Wednesdays for a while now. I think maybe it's been at least 6 months, I would think, maybe longer than that. But if you're looking for a new home, check the links in the description. You can join our Discord for free if you want. See how you like the free section and go from there. If you just want to jump right into advanced options trading, there's a link in the description for my coaching group. I think it's only $30 a month or something like that. It's nothing. I'll make that back for you on the very first trade and then some, no problem. So pretty good deal. And yeah, like always, if anyone needs anything, especially specifically the Discord people, you can always shoot me a DM, and I'm always good at getting back to people and answering pretty quickly. But yeah, if you're looking for a new home, come check us out. If you want to dive deeper into advanced options trading, check out my Coach's Corner. All the links are in the description. I love y'all to death. And tomorrow's the market's closed, and I'll definitely be chatting with everyone very soon. And if you do join the Discord, I definitely look forward to meeting you. Cheers, y'all. Have a great night.